In the last videos, I talked about how I'm going to talk about some concepts of smart money that are special to myself. And major pivot is one of those concepts that you can't find in any other course. And today we are going to talk about major pivots and why those pivots are important. It is a structural, accurate way to look at the market and to look at the market structure, and it helps us increase our accuracy and reward to risk ratio. And especially if you like to invest, you don't like to trade, and I recommend you to do that, especially if you have another job. This concept can be the cornerstone for your trading strategy if I use the cornerstone right. Let's get to major pivots. Hello, how are you? Mehran here, your trading companion, and today we want to talk about a very strong concept named major pivots. And why is that so important? Because it is the protected highs and lows on the chart, and most of the time they are going to get protected by big institutions and big investors. You may think you don't believe in big institutions and investors, and you don't think some pivots and some kind of concept isn't going to work. But if you think about the markets, they should have a way to move. When the market is going upward, it is going to make higher lows and higher highs, and when it is going to downside, it is going to make lower highs and lower lows. And you can't find a market that always move like this. And let's imagine that market moves like this. It is so simple to trade the market with some shapes like this. You sell the high, you buy the low, you sell the high, you buy the low, and you are always in profit. So the most advanced way of market to move and to confuse you is the way that is doing it right now. So the market moves in a way that confuses a lot of people, and today we want to talk about a concept that is special to me. You can't find this concept in any other courses, and that is major pivots. Why is that so important? I said that because it is going to get protected. For example, you can see the market is going to the downside. We talked about a concept named minor pivots, and when it is going to downside, it makes some kind of minor pivot here. You can find the minor pivot concept in the channel, in the smart money playlist anyway. So it is going to down, and it made a minor pivot, and it is going to the upward. It made a minor pivot and it went to the downside. Minor pivot, some correction, minor pivot downside, no minor pivot, another minor pivot downside, minor pivot upside, minor pivot downside. It was one concept that I talked about, and I said that it is special to me, and you can find the start and the finish of pullbacks with the minor pivot concept. But today we are going to talk about major pivots and why they are so important. Let's talk about the major pivots. If you are a swing trader, you are an investor, or you want to take very high probability trades with the right mindset and right concept, this concept is for you. After this video, if you use this concept properly, you can see your result increase substantially. So let's talk about major pivots. We talked about what is a minor pivot. I'm going to introduce that again to some of people who didn't watch that video. The minor pivot happens when it is a change in the forces of the market. For example, a market is making lower highs and lower lows, and it is going to the downside. When the last high that broke the low breaks with a strong move that is going to print some imbalance there, it is a minor pivot. So here we have a minor pivot. It comes up, 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 higher highs, higher lows. When the market breaks the last low that made the last high and prints some kind of imbalances. Sometimes it doesn't have an imbalance and it is a minor pivot as well, but if you want to use this for trading, it is better to have an imbalance, and it is a minor pivot too. What is its usage? You shouldn't take any kind of trade unless you have some kind of minor pivot on your background. So a minor pivot on your background means that the market has shifted its movement and you can trade, for example, here to the upward. But before the minor pivot, if you buy the market here, you get liquidated. If you buy the market here, you get liquidated. Or if you sell the market here, or you sell the market here on this order block, for example, all of these kinds of bullshits you see on other courses, these are just some traps that is made for you. This silver trap is not it for you. Why? Because those courses are going to say that, oh, you see that the market came here, for example, and it started to go lower. Why they say that? Because it is the only time that market started to go lower. It happens sometimes. Sometimes it, for example, it comes here and it goes down. And they are just showing you this order block and they say that, oh, it worked. But you don't see these order blocks or these kinds of order blocks get failed because you are not as familiar as me with the order blocks, and you know that millions of order blocks fail before one order block, one special order block works, and I can help you find that special order block with high accuracy. And one concept is minor pivots. So if you don't have a minor pivot on your background, you shouldn't risk your money in that direction. But if you have a minor pivot on your background, you can say that it is now some condition that I may risk some percentage of my money. These are not actual financial advices. These are just for helping you to learn something about the market. So you should practice them first, and you should mix these things up with the methodology you are using, or you should see the course until the end. You should practice it, and with your responsibility, then you can enter the market for profits. Anyway, let's talk about major pivots. So minor pivots are important because we should have a minor pivot on our background, so we can say that the condition is allowing me to risk my money. Let's talk about major pivots. I wanted to talk about major pivots, and I'm going to fix that and talk about that, but I wanted you, sometimes you may not believe me when I say that we are in an internet blackout and I can't access the market consistently, and you can see that right here. The TradingView and other platforms doesn't allow me to use their services. I should use some kind of VPN. I fixed that and get back. So your support is much appreciated in these dark times for me. You can see how deep and how powerful the concepts are in the channel. I do that for free for you, but you can support me in return. Anyway, let's fix that and talk about major pivots. And the worst thing is that the VPN usage is some kind of a crime here. So I am a felon here. Anyway, don't scare yourself. Maybe this schematic is a little bit messy, but the major pivots is as simple as minor pivots. So we have some kind of minor pivot here. What is a major pivot then? We have another minor pivot here, right? When this special minor pivot comes down and breaks this low that is from another minor pivot, it became a major pivot, and it is our protected high. What I mean by protected high, I mean that the composite men, the people who have the money, the knowledge, I mean a group of people, even they don't know each other, but in some ways they work in the same direction. They work in the shadow of each other. They are not connected with each other. It is illegal for them to work with each other, but somehow they are trading in the same direction, and that's why we see big moves on the markets. Anyway, so we have another, let me make it simple for you. Then we talk about this schematic. Let's say that the market is trending down. It makes some minor pivots here. It comes up. It make another minor pivot which breaks this minor pivot here. You can get a picture of this. So this is our major pivot, and it is going to get protected with big money. What I mean by that? I mean that if even here make another minor pivot, the traders think, oh, the market is going up, the market is making higher highs and higher lows, and they are going to buy the market, buy the market, buy the market. But we see that all of them get liquidated. Why? Because this special minor pivot that is going to be a major pivot, because it broke this low, is going to get protected. So a minor pivot that breaks another minor pivot is going to be a major pivot. Let's get back to our schematic. So we pay attention to minor pivots. Here we have a minor pivot. Why? Because the last high that broke the low got broken, so it is a minor pivot. It comes up, it make another minor pivot here. Why? Because the last low or the neckline that broke the high got broken, but it made itself major pivot when it broke this low. So it is that simple. You may get confused right now, but you go on your chart and do the things that I'm saying. You can see the results, and these kinds of things you should first get comfortable with charts, and that is a little hard, but after you get comfortable with charts, you can come back and see these videos, and you see that how simple these concepts are. Anyway, so, and if you have any other question, or you have a question about these kinds of concepts, you can ask them on the comments. I'm ready to answer them for you. It came down. We want to find another minor pivot. Why? Because we want to see when the market starts to pull back with high accuracy. So when this high that broke the low gets broken, we say that, oh, I'm allowed to take buying trades. I use my strategies, I use my support and resistances, I use my order blocks to enter the market for buys. But I can't, for example, target this high. I can target this high or this high, or for example, I put my Fibonacci from here to here and target this high, but I can't target this high. Why? Because this high gets protected. And when it comes something near this high, or I can use my Fibonacci tools, I can use my minor pivots and protected leg that I talked about the range of trading in the last video, I can say that this is a good opportunity for trade. But when this minor pivot or potentially major pivot gets created, and this low that broke this high should get broken. When the market broke this low, I can say that I am allowed to take selling trade. But in this special opportunity, you can keep your trade or keep a partial of your trade for this low, because this low is targeted now. We have a major pivot protecting this high. After that, this minor pivot comes down and breaks this minor pivot, so it becomes the next major pivot. The market pullbacks with a minor pivot, it comes to this major pivot, and this is a good opportunity to take selling trades after this low gets broken with the target of this low first, and you can keep some parts of your volume for the lower prices. Then this minor pivot and potentially major pivot comes down and breaks this low, so it is a protected major pivot. and so on. Let's talk about these concepts on charts. If you want to get the best results in trading, don't start just using lower time frames. Lower time frames are very hard for making money. You can start from higher time frames to mark your structural point of view, for example 4 hour or daily, and you can use lower time frames, for example 1 hour, 15 minutes or 5 minutes to enter the market. But if you are a novice trader, you should pay attention to these concepts in higher time frames. For example, just use daily and 1 hour time frame for your trading. It is going to make you happy, successful and wealthy. But if you come down, for example, on 1 minute, on 50 seconds, on 2 minutes, you are going to get crushed by the markets and emotions. Why? Because in higher time frames we have a lot of time to decide, to make good decisions, to check the fundamentals, to see the volume and tape, to analyze our charts properly with ease and with patience. But in lower time frames, 90% of your time is going to be consumed with the high volatility of lower time frames. Anyway, let's talk about the major pivots. We start from this high. The last minor pivot is here, so you can start to sell the market to the downside. Why it is the minor pivot? You can see that it came up, it broke this low and this low. Let me zoom it for you. It broke these two lows and it prints some imbalances as well. Yes, imbalance is good for entry, but we don't just use imbalances. We are going to go to lower time frames here for entry. You can see those entries on the coming parts, but now we just talk about minor pivots and major pivots. Let's keep our minds clear of that concept right now. So it broke this low. It is our minor pivot. We are allowed to take selling trades. But we have something here. You can see that here we have some kind of minor pivot. It came down, it broke the high. And if this is too minor for you, you can wait until it comes down, it makes some kind of minor pivot by breaking these highs, and after these minor pivots with this imbalance and with breaking of this minor pivot, let me show you with this marking tool. You can see that we have a minor pivot here, we have a minor pivot here that broke this low. So it is a major pivot. Major pivots are going to get used for liquidity grabs. It is a protected high. It comes up, it grabbed its liquidity and it goes down, or it gets protected anyway and it comes up, for example, to this point and it goes down. Both of those scenarios are good for us because we use minor pivots. So when it comes up and touches this high and make another minor pivot, for example here or here, you can say it came up and broke this low, or in a smaller version, it came up and it broke this low. Let me show you. And it broke this low. So we have another minor pivot here. When this minor pivot happens on another major pivot, we have a major pivot here and a major pivot here. You can take selling trades with comfort and confidence. You can see that it came down, it broke this low. We have another minor pivot here, so we can start to buy some lots here, but it came up and it broke the low. So here is our major pivot. Market doesn't need to come to these points and then we start to find trades. We can use our Fibonacci tool. This leg is protected, and when we have a big move like this, sometimes it start to go down in 38%. Anyway, we have another major pivot here. Why? Because we had our minor pivot, our order block worked well, and it provided us with a trade. I mean this order block. You can just avoid these pullbacks and just trade in the direction of the trend that is more profitable and more reasonable. So these trades are just for scalping. Anyway, you can see that these major pivot broke all these lows, so it is a major pivot. We use our Fibonacci tool, and after 50% retracement you can find selling trades. We have two methods for taking selling trades in the direction of the trend. First is that it should come and make another minor pivot and we can start to take selling trades. You can see that this major pivot got liquidated. I talked about that. Or we can mark our POIs when we have a major pivot in our background and start to take sales and selling setups in lower time frames in this special POI. I use 1 hour and 15 minutes to enter the trade right here. Let me show you. Because we are in a good POI and it doesn't need to come this high and make another minor pivot, we can enter the market before that retracement. We go to 1 hour, we see the charts. Does it provide us with a good opportunity? We have our first shift here, and this is our order block. The market shifts here, and this is our order block, and you can see the results. Let's continue our work. We should wait until this low gets broken because it is our minor pivot that started this pullback, and when that gets broken, this POI, this price range becomes our major pivot. Let's see what happens. So the market came down and broke this low, so it is our major pivot. What I said about major pivots, I said that they gets protected or they get liquidated. You can see that the market liquidate this high with this shadow. What is the liquidation meaning? It means that it comes down, it grabs this liquidity and it goes to the void. But what is liquidity? You can see liquidity part 1, 2, 3 in the channel. Those are high probability and very powerful concepts. Anyway, we can enter the trade after this imbalance. Why? Because it came, it grabbed the high and it broke the low. It is in this way. You should see that in this way. So our minor pivot and our result. After that breaking this low, we should wait until it starts to go higher. It didn't provide us with a minor pivot, but it made a higher high and it made a higher low. So it is going to continue this movement. You can use this concept as well with this order block. But if you are a passive trader and you want to see higher probability opportunities and more accurate opportunities, you can wait for minor pivots to get created. And it came up. We use our Fibonacci tool from here to here. We mark our POIs. We have a 2-day, I think, order block here. Let me see. Yes, it is a 2-day order block. It is a 2-day good order block. It's a gap. It is so important. And we can go to lower time frames and try to catch trades on, for example, 1 hour. You can see that it broke this low and we can enter right on this imbalance. You can see this imbalance here. What is the imbalance? It is the space between the first candle and the third candle in a 3-candle formation. It can be from this shadow to this red shadow. Let me show you. From this candle to this candle. So I can enter higher than that candle and you can see the results. Again, daily. So we have our minor pivot here. So it broke this minor pivot. We have our minor pivot here. It broke this minor pivot. So it is our major pivot right here. We can mark that and we can use our Fibonacci tool. You can see the results on this order block that we talked about. It became another major pivot, so let me do that again. It is our major pivot, and let's see if the market creates another minor pivot. It created a minor pivot, so we can start trading to the upside from here. We use our Fibonacci tool from here to here, and from this high to this low. This POI is good for trading. Let's see what happens. You can see the results on these POIs. It started to go down. It made another minor pivot. We can start to trade to the downside. If this gets broken, it became our major pivot, but it didn't happen yet. It broke this low, so we have two major pivots, one here because broke this low and one here because broke this low. So we are going to use both of them. It made another minor pivot here. Why? Let me show you. You should see the market in a fractal way. You can see that it came down, it came up, it came more down, and it came up. So we have a minor pivot here. You can see that it came up. It touches this 50% barely. I should use this one as well because it's a protected high. You can see that it touched the 60% of that leg and it went down. I don't think you can find anything like this in other channels or other courses. I've spent 7-6 years just practicing, just researching, reading books, watching courses, and at the end I was a great trader until they disconnected the internet. Anyway, I don't think you can find any concepts near these concepts, nearly powerful like these concepts. Thank you for your watching. Thank you for your support. So let's summarize that up. The market is going up. It makes another minor pivot, comes down. It goes up and it comes down. Oh, what happened? So here is our minor pivot. We can start to sell when this happens. It is our another minor pivot. We can start to buy when this happens, but the important thing is that this pivot broke this low. So when the market comes up to that pivot, it is going to get protected. We can enter the trades on POIs using Fibonacci tools and order blocks and support and resistances, any method you are using. But you should pay attention after the 50% of retracement. It is higher probability. You can just use your methods to sell the market here. It should come up, it should get exhausted, it should retrace at least 50% of the leg, then you can start to sell the markets. Thank you for your watching. Your support is much appreciated. If you have any question, you can ask them below in the comments box. Thank you and goodbye.